All right, bro. A lot of people are trying to ask me how can you predict such a move, right? If you open up this Bitcoin chart, it looks pretty horrible. We went all the way from like 124, depending on where you're starting from, all the way to 107. Now, if you go on a different chart like this one says we went all the way to 101. So, besides the point, how do we know this was going to happen? Like, I think that's more important. There's honestly a lot of ways to think about this. A lot of ways. I'm going to try to go through. I'm actually going to create a list right now just to show you guys ways you could have anticipated this. So, Bitcoin analysis. Honestly, we could do it called market analysis. All right. So when we're doing our market analysis, we're gonna add a few things. We're gonna look at gold. I'm just gonna add a bunch of stuff. Show you guys what I look at. So we'll look at the SPX. Look at that one. We'll look at DXY. Now this is more for those who want to do multi. If you're doing different assets, but I'm also gonna cover just Bitcoin itself. So we're gonna look at total 1, 2, and 3. By the way, if you see what it is, it's just basically the market cap of cryptocurrency. This one is excluding Bitcoin. This one's excluding Bitcoin and Ethereum. So we're going to look at all three of them. We're going to look at a few others. There's also something called USDT dominance, which you can also look at. This is looking at the it basically, in the way I like to interpret this, is it's showing you how much money is going into stablecoins relative to the rest of the market, right? Relative to the altcoin market, right? So if you can see right here, this one shot up significantly when the altcoin market started going down, right? So if you actually go to, where is it at? If you go to this list right here, this is the altcoin market, right? So they basically have an inverse relationship. So if you actually do some analysis on the USDT dominance pair, you can actually kind of anticipate where the altcoin market is headed, right? So I'm going to look at this, and I'm also going to look at Bitcoin. Let me add Bitcoin here. We'll add Bitcoin. We'll look at ETH as well, and we'll even look at a few altcoins. So I'm going to look at Pith as an example. We'll look at Ondo. I mean, we can really look at any. We'll look at Sol because I know a lot of people trade Sol. So we'll look at Sol. I'm trying to look at what other altcoins we can look at. There's also others. This one is excluding the top 10 in market cap for altcoins, but I'm not going to look at that. You don't have to, but it is one for those who trade altcoins. We can honestly look at a lot of things. Let me see. We'll look at Ondo just so we have another altcoin to look at, and we'll even look at ARB as an example. So when you're doing this analysis of, like, especially when you're swing trading, this is actually pretty helpful to have all of these in your arsenal. Another one is maybe silver, but that one is, you already have gold, so you don't really need it. So you have gold. Let me see if there's anything else. Maybe the VIX. You might need the VIX if you look at that. This one shares an inverse relationship with the S&P 500, right? So this one's been going up. So if you have all of these things in your trading view, you can actually perform a higher time frame analysis or a macro analysis of what's going to happen, days, weeks, and months in advance. So now how you do that is going to be depending on the time frames you're going to choose and how you're going to combine that with each other, right? So you're trying to find an alignment between these pairs because some of them share an inverse relationship, right? So I'll give you an example. So let's look at the USDT dominance first, right? So if you analyze this chart, right, if you look at let's go on a higher time frame, or maybe we can stay on this 4-hour time frame. If you go on this 4-hour time frame from here to here, you can see that we've been on a downtrend and we started going to an uptrend. So if you already see this sort of trend forming, on October 8th, before today, before Friday, if you see this type of formation forming, you should already tell yourself maybe it's not a good idea to be in the altcoin market, right? So that's already a warning sign. That's one of them. Now, how do we know that price, or how do we know this dominance chart is going to go back all the way up here? I mean, for one, you've already broken above this downtrend, right? So you were in a downtrend for a period of time. Now, if you start from here, you can see we broke out. If you start from up here, you can also see that we broke out, right? We're in a uptrend right now. Now, not only that, you have a lot of imbalances in price right here. You have one right here, and then you have a bunch right here, and then you have liquidity up here. And if you even go further into higher time frame analysis, maybe daily time frame, and looks like even over here, and you pretty much have a lot of, depending on, like I said, depending on the time frame you're doing your analysis, could give you an explanation as to why this went up here, right? So if you're someone who's a swing trader or you're a macro analyst, you might even have figured out that this was going to happen days, before. But if I was just trading on a lower time frame, let's say this 4-hour time frame, I could already see that on Wednesday, October 8th, it's not a good time to be in the altcoin market. So I was already not, I already exited the altcoin market by then. But for those who are learning, this is a warning sign. So when you see the USDT dominance or USDT dominance going up, this should signal as a warning sign to not be exposed in the altcoin market, right? So this is just one of them, right? We can see that by Wednesday, you could have figured it out. Here, maybe not so much because it's not enough information, but by Wednesday, you should have already figured out that this is going to go much higher and that signals to you the altcoins are going to go down, right? So, and if you know anything about order flow, once you go from a downtrend from a bearish order flow to a bullish order flow, price is going to target these imbalances to fill in, orders. So this is just one of them, right? That's just one of them. If we go to total 3, now this is excluding Bitcoin and Ethereum, I think. Yeah, Bitcoin and Ethereum. So depending on the time frame you're doing your analysis, I'm not going to go through all the details of what you could have found, right? Because I could, just by looking at this chart, I could find a lot of things. I can tell you right now that there's a bearish divergence forming right here. You have a rising wedge pattern that's forming right here. Okay, depending on how you draw it. So this is a rising wedge pattern. Now we don't trade patterns, but this is something to be something to just know, you know, in the back of your head, that we have a bearish pattern forming on the daily time frame, right? And what do we notice every time price touches this point right here? We notice that price tends to go down, right? So this is not telling you how much price can go down, but it's already signaling as a warning sign, this is not a time to be buying altcoins, right? So from here, even last week, so this is what, 1, 2, 3, 4, 5, 6 days ago, 6 to 7 last week, you could have already prepared for this. You wouldn't be in a situation where you're losing money because you already had this drawn out, right? This is for those doing swing trading. So especially if you're going to swing trade altcoins, you should already be looking at this chart, right? So you have a bearish pattern, you have a bearish divergence, okay? You can see right here the RSI is also overbought. It looks like right here you have a bearish divergence, right? If you open up other indicators, now I'm not here to say you got to use all these indicators, but what I am saying is that by having these indicators open, you can identify when the market is going to reverse back down. So right here you have price, right here you have price making a higher high, so higher high, you could put 1 day divergence, okay? So what does this tell me? This is telling me that we have a higher high, but we have a lower high on the indicator. And what does this tell me? This tells me that there's the trend is losing momentum, okay? So here you have a divergence, you have a lower high on the MACD, and then you also have a divergence playing out in here, okay? And then it's also overbought. So you have 5, 6, you have so many signals not to enter the altcoin market, right? So that's just one of them. Now let's say you don't have this, let's say you never knew what total 3 was. We can go ahead and look at the stock market, right? Now I'm just cherry picking some of this data because honestly you can do analysis on every time frame and you can really figure out where the market's heading. Right here, you can see right here the S&P 500 is losing momentum right here, right? This is a 1 week time frame. So if you're kind of surprised with the magnitude of how much price dropped in the crypto market, that's because you're not looking at other markets, you're not looking at what's happening, you're not looking at the bigger picture, right? So no matter whether it was tariffs or it was just, you know, central planning or something else happening in the market, you can anticipate these things before they happen just by looking at the charts. It's a matter of combining all these charts together and giving you, you know, kind of like, you know, think of it in real life. Like if you saw like 5, 6 things that were lining up together, you can maybe come up with a conclusion that this is, you know, this, right? But if you don't have those 5 things, you can't really make a conclusion of something. But by having these like 5 different charts that tell you 5 different things, but all support one thing, it's telling you that, look, there's 5 bearish charts. That means I should probably not be in the altcoin market, right? So I showed you USDT, total 3. You can also look at total, which is just the total cryptocurrency market, right? So you can look at that, which the reason why you should look at this one is because this one also includes Bitcoin and Ethereum, right? So right here, what can we do? What I can see right here is, now like I said, this is going to be cherry picking on some of the stuff that I'm looking at because some of you guys are just traders and not analysts. So I can see right here you have a divergence that plays out, okay? And then right here I have a liquidity sweep, okay? How do I know it's a confirmed liquidity sweep? The RSI is overbought and this is the daily time frame, right? So how do we know that this was not a breakout? This is where people tend to be, breakout traders are FOMOing here, all right? This is not where you want to be entering your trades, right? Now, again, the RSI is overbought, okay? You have a liquidity sweep, so this is not a breakout. This is just a liquidity sweep, right? Now, you're not going to get this from right here, but the next candles are telling you we're probably going to be heading down, all right? So I'll show you how you could have figured that out, simply put. Not to mention, during this time that we went up, you know, price had a nice reaction here, shot up, but right here you have a massive imbalance, okay? So that's just another confirmation, another chart telling me that the market was going to dump, right? And then, not to mention, you have it looks like you have a lot of imbalances down here that have not been filled, right? You have an order block right here. So in other words, there was a lot of liquidity being generated during this move up, okay? Now, could you have anticipated how aggressive it was going to be? Probably not. Depending on, I'll go through when I go into the Bitcoin chart. I'll tell you guys how you could have anticipated, because I myself anticipated around 103 to 105. But I'm just going to go back to, so here you have a liquidity sweep, RSI overbought, and then imbalances down here. So you already know price is going to gravitate back down here, okay? If you drop down to a lower time frame, so this is where you have to look at multiple time frames, a multi-time frame analysis. Market structure aligns with higher time frame bias, okay? So right here, if your understanding of price is that we have a liquidity sweep and that this is just a fake out, right? A liquidity sweep is pretty much a fake out, right? If you are claiming that this is a fake out, you need the lower time frame market structure aligns with higher time frame bias, okay? So I have this expectation that price is going to drop, but I need the lower time frame market structure to align with that. So this is a daily time frame, right? So we drop down to a 4-hour time frame, okay? And so I can see right here, it's very clear that we've already broken trend, right? We've already broken trend right here. And right here, if you're using the Fibonacci strategy, you can easily identify the short opportunities right here, okay? So right here, boom. I'm going to circle them so you guys can see it. So this is a short opportunity. I'm going to label it as red. Boom. All right. Boom. And then even right here. But these are 2 opportunities right here where you could have had conviction that the market was going to drop. Okay, so this is what lower time frame market structure looks like when it's aligning with the higher time frame bias. Okay, I'm not going to go in detail that because I do want to make other videos, but I'm just showing you that this chart right here. So let's make a section right here. So this chart right here, this chart right here, this chart right here could have already told you the altcoin market was going to dump. These three charts, all right? The S&P as well, I think I mentioned, or I don't know if I went in detail there, but let me look at it again. The S&P 500, you can see that the weekly time frame is overbought, right? The MACD has been losing momentum since July, right? We've kind of just been, we're forming a divergence essentially, right? Where the momentum is dropping, but price is rising. That's signaling, no, that's not strict. That's not signaling a strong market. That's signaling that the price is rising. Now, if you combine this with economic factors, it's because they're printing money, right? The government's printing money. So as they're printing money, that's entering the market. Market's going higher, but eventually that loses steam, right? That loses power. So here we can use the MACD to kind of identify when they're going to crash the market or when they're going to correct, you know, and pull for prices to drop, basically, right? So if you go on a 3-day time frame, same thing. You can see right here, and the market's been heavily overbought, but here is the first time. This is the first signal that we had where the price is forming a bearish divergence. Okay, if you go on the daily time frame is doing the same exact thing. Okay, so price has been rising, right? But you have a bearish divergence, and not only do you have a bearish divergence, you have a bearish rising wedge. Now again, I don't trade patterns, but this is something you have to know just on the top of your head, because this will help you, which, you know, increasing your arsenal, right? You don't want to just be trading ICT or smart money concepts or supply and demand. You want to have a variety of tools in your arsenal. That way you can actually better understand where the market's going, right? Because now you have different tools at your disposal. So this is one. Chart patterns are very good, even though people don't like them. They're pretty good. So this is one. You have rising wedge showing a bearish divergence. That's 2 signals, right? And then you can go on a lower time frame to make sure that everything aligns, but I'm not going to do that for this one. So that's 4 charts. Let's look at gold. Okay, gold is the same thing. Gold has been doing very well, but of course this is a whole different conversation in my opinion on how we look at this, because this is how should you say this? Simply put, a lot of countries and governments are entering gold. They're accumulating gold. You're seeing a devaluation of the US dollar, which is the DXY. So as this has been losing value, this has been rising in value. Okay, so if you go on a daily time frame, this has been going up and the dollar has been just dropping, right? So inverse relationship, not much there for crypto market, but still a good chart to look at. The VIX, another thing, right? Depending on the time frame you're looking at this, you could pinpoint you know, that we're likely going to go up. I mean, we've been consolidating at support for a while, right? Looks like right here you have a bullish divergence on the 12-hour. Again, this is cherry picking because I'm just going based off what I'm seeing, you know. But depending on whatever chart you choose, you can choose this one, this one, this one, this one. It doesn't matter. But if you're trading crypto, look at these top 3 for sure. This one is more going to be on the stock market. Total 2, again, it's the same thing as total 1, total 2, and total 3. You can apply the same things. This one is just, I think, excluding Bitcoin. Yeah. So if you're just primarily looking at altcoins and Ethereum, this is probably the chart you want to focus on, which we can see is the same story. Let's see. We're going to look at Bitcoin now. Now, Bitcoin, depending on the time frame you're going to look at this, you might get different pictures, or depends on if you're day trading or swing trading. You might look at this differently. I'm just going to show this to you from a higher time frame, right? So what I can see right here, okay, is that price has been forming a divergence. So let's look at this right here. You have a higher high in price. This is on the 1 week time frame. This is a divergence, specifically a bearish divergence, right? So let's look at this. So here you have a divergence, okay? Price then pulls back, and then right here we have a liquidity sweep, right? We're not going to focus on this because let's just call this all-time high, because this was the all-time high before you know, Bitcoin went all the way up here. So this is all-time high, okay? So being knowing that this is all-time high, we understand that markets are going to want to form new all-time highs, right? There's going to be a lot of resistance here. So at first, this is just going to be liquidity. Oops. This is just going to be liquidity, and eventually it becomes a liquidity sweep, right? So when you look at this, right? So you have a 1 week divergence on the 1 week time frame. Now the reason why this is important is because right here you have higher high divergence, and then right here you have higher high as well. Here, let me zoom in. So right here, so it starts from like roughly over here. You'll see it right here. You have another higher high, one week. This is also going to be a divergence, right? So if you notice, every time we had a 1 week divergence, what happened to the price? The price pulled back. Right here we have a higher high, and then right here we have a lower high. Now you might be confused, like, how do you know this is going to be a higher high divergence? Go in a lower time frame. This is where so I'm going to delete the liquidity sweep real quick. How do we know that this is just going to be a higher high divergence? Remember, higher time frame bias, or lower time frame alignment with higher time frame analysis. Okay, so you want your lower time frame to align with your higher time frame analysis. This will give you high quality trade setups. Okay, so we understand that this was a divergence, right? And then we understand there's a higher high divergence playing out right here, right? Now just look at this. Every time that price approached this area, what did the price do? Right here, price went down. Right here, price went down. Right here, price went down. Right here, price starts to shoot down. Okay, so this is my daily time frame, which could be my lower time frame depending on what time frame I'm focusing on. But the daily time frame is overbought, right? And so this aligns with my 1 week time frame, saying that this is just a liquidity sweep on a higher time frame. So when you look at that, you understand this is divergence, but you also understand that this is just a liquidity sweep and a fake out. Oops, fake out. All right. So with that understanding, just looking at the daily time from our side, we can see every time it touches this, price has shot down. Right. So this reaction right here, we're not going to know it on this day. So if you look in the bottom, it says Monday, October 6th. October 6th, we're not going to know that. By October 8th, which is Wednesday, you should know that this is going to go drop down. Now, how much of a drop? Let's look at the price. Price right here shot up significantly. So that's a massive imbalance in price. So price is going to want to rebalance price. So whether it goes here or here, doesn't matter. Now, I'll give you guys a simple tip on how to make sure you're choosing the right fair value gaps. Right here, we have a fair value gap, right? This is a FVG, right? Which acts, FVG magnet for price. But how do you choose the right fair value gap? You grab a Fibonacci retracement. You go from this low to this confirmed high. So I'm not going to, actually, I'll just write that. Confirmed high, confirmed high, confirmed low, right? So once you have a confirmed high, confirmed low, you can use a Fibonacci retracement, right? So now that you have this, you can see that this fair value gap lines with the 5 and 618 as a discount zone, right? But if we look at even down here, you also have a gap down here, right? So what does that mean? People who are day trading are going to have alerts here, and this is the ideal setup that people have, is that their idea is like, I'm going to buy here. Okay. Traders plan to buy here. So this is higher time frame analysis, right? We're on a daily time frame. Now, if we go to this 1 hour time frame, okay, we're going to go back to this, exactly where traders plan to buy here. This is where you need to use your head. You need to use common sense. You need to understand that the lower time frame must align with your higher time frame buy. So if your higher time frame is telling you, I want to buy here, right? As a trader, you plan to buy inside this fair value gap, inside of this zone. Now, this is a really big zone, by the way, so I wouldn't even use this as an example. But traders plan to buy here, right? Now, if you just look at the price action alone, does it look like people are buying here? Does it look like smart money's buying here? It doesn't, right? So if you're a trader and you said, I'm gonna buy at 115 or 116, does it look like they were trying to buy here? Probably not, right? So this immediately, even if you plan for this trade, you should immediately tell yourself, this is probably not gonna go out. It's probably not gonna go as planned. I'm not gonna enter here. I'm gonna wait for a lower level. Okay, so that's just using common sense at that point. And then from here, you go back to a higher time frame, right? And if you look at this trend line right here, we never swept this low, right? So this is still going to act as liquidity on a higher time frame. When I say liquidity, buyers are here. Okay, we never took out these buyers. So if we think of it like that, this is just an area of liquidity. Okay, that's all it is. I'm gonna delete this. I'm gonna delete that. So remember, why did this gap not work? Because the lower time frame did not align with that higher time frame analysis, right? So it has to align with each other. Okay, so here buyers are here, so this is an area of liquidity. So this is why the price went all the way down here to take them out, right? So with that being said, since this is an area of liquidity, this is where stop losses are being placed. Stop losses are getting hit here. This could present an entry long, right? Present entry long for, I'll just keep it like that. Present entry long. So because we know stop losses are here, it presents an entry long. So people who are here, who plan for this trade on a higher time frame, they could have planned to enter here, right? Now, again, depending on which chart you looked at. So if you go over here, let me see, hold on, let me see. Right here, you can see that Bitcoin went all the way to 101. So this is actually where I was looking at, but I guess some exchanges, they didn't, for some reason, they're not aligning with the same price. The reason why I anticipated down here is because this is a gap that I've been mentioning. I've mentioned like once or twice, but not to mention, if you look at it from this perspective, that this is a liquidity sweep. Right? We'll put LS for short. And if you look at market structure, okay, here, market was just going down. Okay, market goes up a lot. People are accumulating, right? People are buying. Price shoots up. Okay, so here, downtrend, right? We broke. Oh, I think my mic died. Okay, so we broke out of this downtrend, and then we can see right here, people were buying, right? So people were accumulation, lots of buyers. Okay. So there's a lot of buyers here, right? And then what happened is price obviously made an all-time high, and then right here, price forms a bottom. Okay, now price forms a bottom. Okay, so a lot of people. So this gap is left untapped. Okay, so we have a gap right here that's left untapped. If we understand how gaps work, they act as a magnet for price. Remember, gaps act as magnets for price. Okay. So if you have a gap right here, I'm going to make this color a little lighter because I'm going to explain this. So think about this. A lot of people are buying here. Gap is left untapped. Gap acts as a magnet for price. Okay. So if this is just a liquidity sweep, okay, I'm going to explain further why it even shot down this badly too. Okay, right here, if you look at the big move, price started down here, went all the way up here, pull back, went up here. Okay, right here we got our first signs of a break of structure. I'm going to show you what I mean by that. So remember, break of structure, right? And then what does price do? It forms a low, a lower low. Okay. Now here, a lot of people are going to think this is a break of structure. Retail thinks this is break of structure. They think, oh shoot, it's breaking the all-time highs. The expectation is we're breaking all-time highs, right? So they think, oh, it's just going to go like this. We're in that parabolic move, right? But the RSI itself does not support that idea. So that's already one thing. Going based off one indicator. I don't need to pull a lot of indicators, just one, right? So based off that, I already know this is not a good time to go buy, not a good time to go long, none of that, right? So retail thinks this is break of structure. Reality is liquidity sweep, right? So break of structure, right? And then right here, the price never sweeps below this low. So this acts as liquidity, which I already mentioned on the other chart, right? So this right here acts as area of liquidity. Okay. So what does that mean? There's a lot of stop losses here. Now, if we're gonna go before the dump happened. If this is an area of liquidity, okay. If this is an area of liquidity and there's a lot of stop losses here, lots of stop losses, okay. Don't you think that the market is gonna want to come back here in the future again? Because there's a lot of stop losses, right? So if that's the case, and then you have a massive imbalance in price, okay, this liquidity sweep, reality is liquidity sweep, is just a fake out, okay? This is just pure manipulation. So when you're trading, you need to give price a narrative. You need to understand why price is there. Why is it even, now why is it that price went up here? Because it's pure manipulation. They needed to manipulate people into believing that price was going to go in this parabolic move, or that price was going to go even higher. So, but by understanding that this was a liquidity sweep, a fake out, confirmed by an RSI overbought, now you have this understanding that this is not a breakout. This is not a break structure. Price is not going to go straight up, right? At the very least, you're going to fill in these imbalances, okay? So this one and this one, right? And then there's an order block right here, and of course, lots of stop losses. And then right here, you still have this gap that's been untapped, right? So if you understand this is pure manipulation, then you're not going to be entering trade here, right? Liquidity is down here and balance is down here. So if you were a trader, a logical trader using common sense, you wouldn't be entering anything here. You would tell yourself, I'm going to wait until we come back down here. At the very least, if you're using a Fibonacci retracement, you would tell yourself, I'm going to enter at the discount, okay? And the discount is not until 115 to 112. So if you were FOMOing at 120, that's just pure, stupid. I think it's just pure emotional trading. I'm not going to say stupid because there's no point. But when you look at the market like this, you ask yourself two questions. Okay, so we're trading at 121,000. Where's price likely to go next? Well, it looks like to me we have a liquidity sweep. Price is being manipulated. We have an RSI that's overbought. We have a lot of liquidity on the bottom. So where's price likely to go next? Price goes to where liquidity is, okay? And not to mention, this is not just a daily, this is where going higher time frame makes sense. This is not just a daily fake out. This is a 3-day fake out. This is a weekly fake out. This is forming a triple divergence, okay? So you have a divergence right here. Divergence, okay? So we're going through the time frame so you understand this. There's a divergence right here, which I already labeled on the other chart. Remember, divergence, okay? And then the price pulls back, it breaks structure. So look at this. If you watch okay, after this, watch my 5-minute video because I explain how to trade this, okay? You have a divergence, you have a break of structure, right? And then after this, people think after the divergence, we're instantly going to go from, from down here all the way down here. That's not how it works. Market has to generate liquidity, right? So we have this bearish divergence that was warning us since May and July. So during this time period, we were just generating liquidity, it's price manipulation. And then from there, on the lower time frame. So remember, I'm trying to make this video not too long because, what's the point? But it's really helpful to understand this. 1 week bias is bearish, okay? We have a bearish bias, okay? And then what happens? We go into the 3 days. So let me go 3 day. 3 day is overbought. We have a bearish divergence again, okay? You have a higher high in price, okay? I really don't want to have too much on my screen because I feel like this is too much, but as an analyst, you might be looking at all this. But if you're swing trading, you can make this more simple. I'm just here to really show you guys how much you can do in terms of predicting the price. Right? So you have divergence, right? Manipulation, liquidity sweep, fake out. All these words should be screaming short, right? Not to mention, so the 3 day is bearish, okay? Let's go to the 1 day. Look at the 1 day. The 1 day, now you're probably gonna be wondering, how do I know this is bearish? Okay, the RSI is overbought around Sunday, Monday, right? But the price doesn't start to go down. So let's go to it, Sunday, Monday, right here. So it's overbought right here. Right now, you would not know that this is gonna go down. You really don't. But you see there's a lot of imbalances that price is leaving, okay? Right, price is leaving a lot of imbalance, which means there's gonna be a big dip into these areas because this is where, price needs to rebalance. And then you also want to reach a discount zone. So this is not where you FOMO, especially when you're up this high, right? So the 1 day is more of neutral. Now, if you wait a couple days, so let's go a little slower. Okay, this starts to go down. This is a red flag. You see this? You see this RSI? This is a red flag. All right, I'm not gonna. All right, it's a red flag. You do not want this. All right, so let's go to the next one. Go to the next one. Go to the next one. Okay, right here. This one still a red flag because now. Oops, went too fast. Now the reason why it's a red flag is because if you know the RSI is going down, it's gonna want to come back down all the way back down to reset. Right? Look at how many times it's gone up here and it goes all the way back down. So we already know the 1 day is bearish. All right. Now let's go to. I'm gonna skip 12 hours just because we're gonna go straight to 4-hour time frame. And our focus is gonna be this circle right here, 4-hour time frame. Boom. You see this? You've gone from an uptrend to a downtrend. 4-hour time frame. Market structure is bearish. Now, 15-minute entries should be short. That's all it is, right? That's all it is. So look at this. Now, like I said, we're focusing on the circle now. So if you see right here, so how do I play this out? Now I have a 1 week bias. It's bearish. My 3 day is bearish. My 1 day is bearish. My 4-hour market structure is bearish. So my 15-minute entries should be short. Now, how do I get my 15-minute entries? Confirm high, confirm low. Pretty simple, right? Boom, boom, and then boom, right? So now I have these two, 1, 2, 3, 4, right? And which points did I use? Because I feel like some people are gonna not see this. 1, 2, 1, 2, right? So now that I trade, okay, boom, I have my bias. I'm no longer here. I'm not trying to go for long. I'm not trying to buy here. I'm trying to short here. Okay, so shorts and oops and shorts. Pretty simple. Right now, when it comes to the I'm not going to go in detail about the entry, but because all of these are bearish, you have to expect that this move is not going to be a 1% move. Now, did you know it's going to be 50%? Probably not. At least a good 5 to 10 to maybe 20, because of the fact that it's 1 week, 3 day, and 1 day. It's not just a 4-hour, 15 minutes, or 1 hour that's bearish. It's all these time frames that are bearish. Okay, so you can predict the price was going to drop significantly before the tariff news, before the Chinese tariffs or whatever tariffs came out, right? So going back to that, so we, what did I call it? Market analysis right here. So I just broke down Bitcoin. ETH is the same exact thing. Now this one I'm really not going to go too far. I'm not going to really add too much information because I think this one is relatively simple. I mean, just think about it. We're trading at all-time highs resistance. I mean, this one is pretty self-explanatory. Like, I don't need to really say much, right? Right here, right? So you have a breakup structure, okay? And then what does price do in this breakup structure? Remember, this is a low, a lower low. This is a high, lower high, and it looks like right here, another lower high. Okay, so right here, going into right here, you should have the expectation that price is probably going to come down here, right? This is going to be your external liquidity. External liquidity. We expect price to come down here if it respects the previous lower high. Okay, which means if you took an entry here, stop loss here, you want price not to take out this guy, because if it takes this guy out, then obviously this respects the structure and probably will go higher, right? So this is what the trade setup would look like. And over here, we already know that these wicks right here act as liquidity. So at the very least, you can go in a lower time frame to confirm that. I'm not going to go in a lower time frame, but just doing the analysis ahead of time will help you. Okay, so divergence, boom, high, lower high. Right here, you have a fake out, all right? And it's very easy to know this is a fake out. I mean, one red box already told you it's fake out, and then the RSI, right? Boom. So I'm not going to go through much in that, too much in detail for that one. That one's pretty good. Solana. Now I'm not going to go in detail for this one either. I'm just going to show you guys. Okay, we already had a bearish structure. We had a bearish break right here, right? Break a structure into the premium, and you could take a short here, right? So that's one of them. Let's go into Ondo right here. It's the same exact thing. It's a little different. This one is a reaction at the bearish fair value gap, right? So this one we didn't even sweep this high. Okay, no sweep. So that's fine though. No sweep is okay, because what you're seeing is just a break of structure at this point, right? So right here, we sweep below sell side, okay? Actually, I'm not gonna draw that. But from there, you literally could have just drawn something like this. Now, why did I choose this? Price goes down, up, and then down, right? So this high to create this low, right? So that's another one. So I looked at all these charts just to show you guys really that you could have been prepared for this one. This one is also pretty good. You have a bearish fair value gap, right? You have a liquidity sweep. So you have a liquidity sweep after a bearish fair value gap that forms after, and you also break structure. Okay, cool. And then you get a retracement into this fair value gap. Obviously, right here you had another opportunity to go short. So maybe it's simple in looking at it because it already happened. But like I said, if you're following along, you're planning your trades, low, lower low, high, lower high. Pretty simple, right? That's one. Let me see this one. This one just looks like dog shit. I mean, it just looks horrible. So, I mean, just think about this. The fact that all these altcoins look the same, they all look bearish, should tell you that the market was going to dump. You honestly didn't have to look at all these charts, but the fact that 3 altcoins look bearish, I mean, this one, 1, 2, 3 of them look bearish, should be already enough confirmation that the price is going to drop, right? But again, I'm done with this. If I keep going, this video is going to be like 2 hours, 3 hours, because I can really break down the markets on every time frame, show you how to predict price, but maybe I'll make more videos. We'll see.